Okay, how you doing today? My name is Matt Reynolds. I'm president of Derivative Concepts. We develop trading methodologies and systems for auction-based markets, which primarily we trade in the Forex and futures markets. I am the creator of ZoneTrader philosophy. It is an auction market-based system. I have a BS in finance and an MBA, and I used to be a broker in the futures markets, and actually was always more interested in the trading side of things, and started developing my own systems, my own indicators, stuff like that. And that's when we started building this ZoneTrader model, which is an auction-based system. What I've done basically is create a pricing map, and by creating these zones within this pricing map, I was able to define each zone so that we can determine where the market is and what the market's trying to do at all times. All we have to do is memorize the zones and the rules within those zones, and very quickly we can look at the market, see where it is, and make a decision. You don't need indicators. Okay? Most indicators are lagging anyways. And this system is much more faster, much more frugal. It is a support resistance based trading system. Okay, so you get every single horizontal line in here is a support resistance level. Okay, by creating these support resistance levels, define these zones, allowed us to capture the psychology of the current market, the underlying psychology. So we do that by understanding how markets operate. How auction markets operate is they all start out in a balanced state, okay? Which, the bulls and bears are fighting for control on the day. They're balanced. And all markets operate the same way. They make breakouts, they establish trends, and they extend trends. Okay? If they can't break out, they pull back to the point of control. If they can't confirm a trend, they pull back to the point of control. If they can't extend a trend, they pull back to the point of control. So in this case here, our point of control is going to be the ZoneTrader pivot, the white line, which is the midpoint of the neutral zone. So MR1 to MS1, both are royal, is always going to be the neutral zone. Now, if the market's breaking above the neutral zone, it's moving in the bullish direction. So from MR1 to MR2, the zone, we call that the bullish breakout zone. We're trying to determine if the market is going to break out and continue to try, to move in the upward direction. So we apply apply specific rules to that zone to determine that. Same thing into the opposite direction. MS1 to MS2 is the bearish breakout zone. So we look for a candle body close below the midpoint between MS1 and MS2 to determine if the market's going to break out. MR2 to MR3 is the bullish confirmation zone. We use that zone to determine if the market's going to establish a trend or not. MS2 to MS3 is the bearish confirmation zone. Again, we're using these zones to determine if the market is going to establish a trend. MR3 to MR4, is the bullish trend extension zone. We use this zone to determine if the market can extend the already established trend. And then MS3 to MS4 is the bearish trend extension zone. Again, we're looking to see if the market can extend an already established downtrend. Okay, so a lot of times what happens is the market establishes a trend, but then the market tries to push prices too far, too fast, and it fails to extend that trend and reverses. So again, we've created rules within each zone to determine that, and we have supplement videos to teach you those rules. This is just more of an introductory basis. So this is, again, a support resistance-based system. It's much more faster, more frugal than your lagging indicators like MACD, stochastics, %R, CCI. Doesn't matter. Most of those are all lagging indicators. And again, what we're doing here is we're capturing the psychology of the market. All we have to do is look at what's happening and apply the rules, and we know where the market's heading. Okay, because we could say, basically, the market's failing to establish a downtrend, it's going to reverse. It's telling us that the bears pushed it out, they broke it out, but they didn't have enough selling volume to establish a trend, and the bulls are taking back control. So we always know what the current underlying psychology of the market is, which is a major battle in trading any auction market is understanding the underlying psychology of the market. This keeps you from taking false signals, which you can incur on statistical-based trading indicators. Now, the problem with a lot of them, why they're lagging, is you got to measure enough data to get a sufficient answer, and you miss a lot of the turns in the market because by the time you get a signal, the move's already halfway gone. And then the problem with a lot of day traders is that they look at too small of a time frame. So they're looking at lagging indicators, and then they're on a small time frame, and they get all these false signals, and they keep losing money, and they don't understand why. It's because they're looking at too small of a time frame. The smaller you go in time frame, the more false signals you will incur on lagging indicators. The difference between that and my system is that this is support resistance based. The rules are specific on what to look for to determine if the trend's going to continue or if the trend's going to reverse. So it eliminates those false signals that you incur on statistical based indicators. Again, it's called ZoneTrader philosophy. My name is Matt Reynolds, Derivative Concepts, Inc. We hope to see you in the live room.